You work hard, you pay your bills. You don't splurge and you don't slack. You do everything the system tells you to do. But somehow the dream of owning a home slips further away every year. You watch housing prices skyrocket while your paycheck barely budges. You try to save, but rent keeps rising. And by the time you've set aside enough for a down payment, that starter home, already out of reach. Meanwhile, you've paid thousands in rent, on time, every month, with nothing to show for it. No equity, no stability, no ownership. And then someone says, "Why don't you just buy instead of renting?" As if it were a choice. But here's the truth. For millions of people, it's not that they won't own a home, it's that the system has made sure they can't. This is the rent trap, and in this video, we're going to show you exactly how it works, who profits from it, and why it's getting harder and harder to ever escape. There was a time when renting meant transition. You rented while you saved, while you built your credit, while you found the right home to settle into. It was temporary, a stepping stone. But today, for millions of people, renting isn't a bridge to ownership. It's a wall they can't climb. Take Marcus. He's 32, works full-time as a technician, and rents a one-bedroom apartment in a mid-sized city. He's paid on time, every month, for the past 6 years. Over that time, he's handed his landlord more than $130,000. And yet, if Marcus applies for a mortgage today, he'd be told he doesn't have a large enough down payment. His credit score is borderline. His debt-to-income ratio is too high because he's paying market rent that rivals a mortgage payment. In other words, he can afford to pay someone else's mortgage, but not his own. That's the trap. The system doesn't reward consistency. It punishes lack of wealth. And while Marcus tries to break through, the wall keeps getting higher because every year the price of homes rises faster than his ability to save. In the past decade, home prices in many cities have doubled. Wages, not even close. And the myth still lingers. Rent while you save. Buy when you're ready. But what happens when saving isn't enough? What happens when ownership keeps accelerating and you're stuck sprinting in place? The truth is, renting isn't the first step on the path to ownership anymore. For many, it's the end of the road. And the worst part? It's designed to look like progress. Because while you're told to save for your future, the system keeps making sure you can't. Every financial guru tells you the same thing. Just save more, cut back, budget better, make coffee at home. It sounds reasonable until you actually run the numbers. Let's say you're trying to buy a home that costs $350,000, a modest starter home in many parts of the US today. To get a mortgage with decent terms, you'll likely need a down payment of at least 10%. That's $35,000. Then there are closing costs, appraisal fees, home inspections, moving expenses, and a few thousand set aside for inevitable repairs. Realistically, you need closer to $45,000 to be safe. Now ask yourself, how do you save that much while paying $1,800 a month in rent, plus utilities, transportation, groceries, health insurance, and student loans? The median renter household in the US now spends more than 30% of its income on housing. Many spend over 50%. And when you're living that close to the edge, saving becomes a luxury. Every time you set something aside, life takes it back. Your car needs repairs, rent increases, groceries spike, your kid gets sick. It's not that you aren't saving, it's that the world keeps charging you for trying. And then, even when you do manage to build some savings, the market shifts again. That $350,000 home, next year it's worth $380,000. The down payment you worked so hard to save? No longer enough. You're not losing the race because you're lazy. You're losing because the finish line moves faster than you can run. And here's the kicker. While you're being told to just save, you're also being denied access to the very tools that help wealth grow. You can't build equity. You can't invest in real estate. You're stuck throwing money into rent month after month and watching the price of ownership drift further into the clouds. This isn't a matter of personal finance. It's structural. It's designed to feel like your fault, when in reality the game is rigged from the start. And even if you do scrape together the money, there's still one more gatekeeper waiting to say no: credit. Let's say you've done the impossible. You've saved a down payment. You've found a modest home. You're finally ready to break free from rent. But there's one more hurdle: your credit score. To qualify for most conventional mortgages, lenders want to see a score of at least 680 to 720, preferably higher. That's fine if you've had access to the right kind of credit. But here's where the trap tightens. Rent payments, your single biggest monthly expense, don't even count toward your credit score with most scoring models. Let that sink in. You can make 60 rent payments in a row, on time, in full, every single month, and still have no credit history to show for it. Meanwhile, someone with a store credit card, 2 car loans, and a $20,000 balance on their line of credit may be seen as a more credit-worthy borrower, even if they've missed payments. Why? Because credit scores were never designed to measure responsibility. They were designed to measure profit potential. You're not rewarded for staying out of debt. You're rewarded for using debt and paying interest on time. And if you have student loans, or a medical emergency that tanked your score, or no family to co-sign your first credit line, the system sees you not as cautious, but as risky. So what happens? You either get denied the mortgage altogether, or you're approved at a higher interest rate. That means you'll pay more over time for the same house someone else got cheaper, just because their credit score was 40 points higher. This isn't just inconvenient. It's structural punishment for being poor, for being careful, or for not having access to generational wealth. And even if you play by the rules, you're still navigating a scoring system that wasn't built with renters or working class people in mind. It's not a ladder, it's a maze, one where the exits are hidden behind opaque numbers and automated rejections. And while you're caught in that maze, someone else is buying the homes you can't, in cash. Because for the people who benefit from the rent trap, the system is working exactly as planned. Here's the question no one asked when talking about the housing crisis. If so many people are struggling to buy homes, then who's buying them all? The answer: not families, not first-time buyers, not people like you. It's corporations, Wall Street firms, private equity giants, real estate investment trusts, companies like Blackstone, Invitation Homes, American Homes for Rent. They're not just investing in real estate, they're buying up entire neighborhoods, sometimes entire zip codes, in cash. And when a working-class family shows up with a pre-approval letter and a dream, they're outbid before they even get a chance. Why are corporations buying homes? Because rent is reliable, and people are desperate. Every time you're denied a mortgage, every time you're forced to keep renting, they win. They collect your rent. They raise it when they want to. They charge late fees, pet fees, service fees. They invest your payments into more property and expand their empire on the backs of people who were locked out of ownership. In the past decade, institutional investors have purchased over 1 in 7 single-family homes sold in the U.S. And in some markets like Atlanta or Phoenix, that number is closer to 1 in 4. This isn't a coincidence. It's a business strategy. The fewer people who own, the more people who rent. The more people who rent, the more control, cash flow, and leverage investors gain. And it's not just investors. Tech companies have joined in too. Algorithms scan the market, identifying undervalued properties. Offers go out before you've even seen the listing. You're not competing with other buyers. You're competing with data centers and billion-dollar funds. And the tragedy, those homes they're snatching up used to be starter homes. The ones young families used to build equity, stability, a future. Now they're investment vehicles. And you're the revenue stream. And while they build wealth with your rent checks, what are you left with? Stress, instability, and the creeping fear that this borrowed life may never become your own. It's easy to talk about housing in numbers, interest rates, median prices, rent inflation. But what's harder to measure is what renting takes from you emotionally. Because when you don't own where you live, you never feel fully safe. You don't control your rent. You don't control your lease. You don't even know if you'll be in the same home next year. And that does something to a person. You think twice before hanging photos. You don't bother planting flowers. You hesitate before painting your child's bedroom because you might have to move again. You keep your life temporary. Parents say goodbye to neighbors every year because someone's rent jumped by $300 overnight. Kids leave their schools mid-semester. Friendships get reset. Roots don't grow because the soil keeps shifting. And all the while you carry this invisible weight, this feeling that your life is on someone else's schedule, that no matter how hard you work, you're borrowing stability, never building it. You wake up worrying about rent hikes. You avoid calling the landlord about that leaky pipe, afraid it'll lead to an inspection, or worse, a non-renewal. You smile when friends talk about remodeling their kitchens. But deep down, you're wondering if you'll even have the same address next year. And maybe the worst part? You're made to feel like it's your fault, as if you just didn't try hard enough, as if you're financially irresponsible, as if the dream slipping away in front of you was never real to begin with. But it was real, and it still is. It's just been priced out of reach and replaced with shame. Because this isn't just a financial trap, it's a psychological one. And it doesn't just steal your wealth, it steals your peace. But here's the truth. If you've paid rent on time for years, you've already proven you're responsible enough to own a home. The real problem isn't you, it's the system. And it's time we talked about how to fix it. Here's the truth. If you can afford rent, you should be able to afford a mortgage. If you've paid on time for years, you should get credit for it. And if you work hard every day, you shouldn't be locked out of stability. But this system wasn't built to reward you. It was built to extract from you. The rent trap isn't a broken system, it's a profitable one. For the people holding the keys. So what can you do? Start by knowing it's not your fault. Then share this video. Talk about the trap. Support rent reporting legislation. Support affordable housing. Push for credit reform. Because the more people who understand how the system works, the harder it becomes to justify keeping it that way. Subscribe to EconoFocus for more untold truths behind the everyday economy. And remember, knowledge is power, and power only shifts when enough people demand it.